Over the past decade, the Federal Reserve has been robbing everybody blind with US national debt over $37 trillion. And just recently, they dropped the effective federal funds rate from 4.33 to now at 4.08%. And the next FOMC meeting happening in 39 days from right now, with a 91% expectation of another rate cut. We've seen the altcoin market do virtually nothing and go sideways over the past week. So if you were born in the early 80s, even late 90s, going into the 2000s, and you're a part of the millennial generation, Gen Z, or even Generation Alpha, and you're watching this video and you're like 12 years old, which based on these statistics should actually be 0% of our audience. 18 to 24 year olds are 1.5%. And then from 25 and up is the age range of all of our viewers, where the majority of them are anywhere between 35 to 65 years old. So most of you guys are millennials, Gen Y, and even Gen X. So regardless of whatever generation you are in, this is the problem that we're facing right now. Here's just one example of it.
Dude, travel in the US is dead, and it's all because of corporate greed. On my honeymoon right now, my last leg, I'm in Honolulu, and I just stayed at a resort, and I saw a $500 bill being tagged onto my bill at checkout, and it says it's a daily resort fee of $52 plus tax per room per day. The following amenities are included: fresh flower or cocoa nut laid greeting upon arrival for 2 guests per stay. Okay, which we didn't ask for because the flower was itching my neck, but that was the one thing that we got. Daily morning yoga for 2 guests. Bag of freshly baked shitty banana bread muffins from meditation class for 2 guests. Refillable logo water bottles. Daily cultural activities. Daily high-speed internet access, which you already get as a Marriott Bonvoy member. The only thing you get from being a Marriott Bonvoy member. Guess what's not included? The actual beach chairs. If I'm at a resort, I assume that I will have a place to lay under an umbrella. Look at this beach. Oh no, we got swept under the sand in the beach, so we're at the pool now. All of these chairs up front, we thought they were all occupied, but no. There's a $200 fee to reserve one of those chairs in the sun. Why would I pay $200 as a guest on top of what I'm already paying, on top of this resort fee that's charging me for things that I don't want for a beach chair, when I could just go farther back and find one of these shittier beach chairs to sit in? But is that how you're going to treat your guests? Give them a shittier beach chair because you have other beach chairs up front that you're going to charge $200 for? And not even on the actual beach, because the actual dollar beach is to reserve them a day in advance for $70 per chair. And otherwise, there's absolutely no space on the beach. Literally, go to anywhere else. Go to any other country for your honeymoon, for your vacation. Save your hard-earned cash and do that, because in the US, you're never going to feel welcome as a guest. It's so weird that every single thing that you don't want to pay for, you have to pay for. And then every single thing that you actually want, you have to pay for on top of that. And it's not included in the fee that you already paid for. Not to mention the actual hotel. It's so messed up when a hotel that would lose nothing from giving something out for free, like these chairs that they already have, to their guests who are already paying. Instead of doing that, they want to charge the guests $70 for a chair to sit on. It would absolutely mean nothing to them to just let us sit on it for free. But they're charging us because they can. When you're paying a lot for a fancy 5-star resort as it is, let us sit in the damn chairs, dude.
And there's a mixed reaction in the comments, like people saying, why do women like to travel so much? Can't they just be happy where they are? It's like they're looking for happiness anywhere except for home, which I think is a stupid comment because she's on her honeymoon, so they're traveling together. And Will said, she's poor. I just booked a $17,000 baby moon for my wife for 3 nights in upstate New York. And then Mirthful Moment said, earn it, tax, spend it, taxed. All of it is essentially taxed. Meanwhile, they waste it. Our wallets are bleeding. Our futures are being drained. So it's not just taxation, it's exploitation. And it's time to draw the line. So in today's video, I'm going to break down exactly what the younger generation needs to do right now, even millennials or baby boomers. So we're going to talk about the facts. We're going to talk about inflation, the purchasing power of the dollar, real versus nominal wage in the US, historical trends over the years, the path forward and what that looks like, what's smarter, buying or renting right now if you're into real estate, and what's happening right now with the global money supply, and some insane crypto news that you guys need to see. We're going to get into the charts here for the total altcoin market. We're going to compare it to Bitcoin. And then we have some big news for Ripple, for XRP, and my expectations moving forward over the next 1 to 3 months. And while a lot of people will tell you you're still early or you have plenty of time, that could not be further from the truth, because you are very limited on time and you must move with a sense of urgency if you want to protect yourself before the next major crash happens. So this is going to be the most important video that you watch all month, let alone all year long. Comment 777 if you're feeling bullish, if you're feeling blessed, regardless of what's happening with inflation and the macroeconomy right now. And if you're going to become the first millionaire in your family tree, I want you to confirm it by tapping the subscribe button. Let's run it.
Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes, eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with iTrust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this. And iTrust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.
All right, bull runners, welcome back to the channel. So let's dive right in and let's talk about the expectations over the next few months, because October, the Fed is likely to cut. December, the Fed's likely to cut. January, they're likely to cut. And in Jerome Powell's speech, this image was posted right here about the expectations for rate cuts. And each dot represents what one Fed official thinks the midpoint of the target range should be by the end of the year and into next year, going into 2027. So the Fed is going to keep cutting rates going into 2027, which theoretically should be bullish for the market. But is that the case? Well, let's discuss it, because the Fed has a dual mandate to keep inflation low and employment high, whereas inflation has been going up since April. And so with them expecting to lower rates, they're caught in a pickle, like I always say here, where I'm actually expecting inflation to go up, very similar to what happened here after February of 2021 until June of 2022. Because if you look right here on the effective federal funds rate in February, the rates were at 0.08%, and they stayed low around that exact same level until a year later of February of 2022. But by then, inflation had already climbed up to 7.9%, and they were too late. So as Donald Trump has said, too late, Powell always raises rates or cuts rates too late, and they're doing the same thing again. So inflation has been low around their 2% target for the past year now, and now they're deciding to cut rates. Now the problem is inflation's been ticking up. So with them cutting rates, it's more likely that inflation goes up rather than going down. And the reason why is really simple. Rate cuts lower borrowing costs, encouraging spending and investing, which boosts demand. So increased demand can outpace supply, pushing prices up and raising inflation. And regardless of whether inflation goes up closer to 4, 5, 6, 7, 8, 9, 10% or not, regardless, if you look at the inflation calculator with US CPI data over the years, well, in January 2024, $1,000 would take $1,030 now to buy the same item. And if you expand that out even longer, over the course of 25 years from the year 2000 to January of this year, you would have lost 88% of your spending power, and it would take nearly a 2x to buy the same items today as it would back in the year 2000. So for the 20-year-olds out there, or 30-year-olds, or even 40-year-olds who don't own a home yet, over the next 10 to 20 years, it's about to get even worse, because the US national debt has ballooned so much to the point where it's created such a big gap between the federal spending and the tax revenue to create a budget deficit of nearly $2 trillion. Now, the real issue is not just the deficit or the spending here and the money printing, it's the interest the government has to pay on that debt. And as inflation continues to rise, but minimum wage hasn't changed in over 15 years, then it's very difficult for the everyday American to get ahead unless they become investors or they start their own business. Because if you look at this chart right here showing the difference between real and nominal value of the federal minimum wage in the United States from 1938 to 2024, you can see that the unadjusted wage, which is real US dollars at face value, is $7.25, whereas the inflation adjusted wage is the exact same. Now, here's the issue with this. If we look back at 1970 at the peak here in terms of inflation adjusted wage in nominal US dollars at $13.05 versus the unadjusted wage, which is real US dollars, which was $1.60 for minimum wage in the 70s. So this means that $1.60 in 1970s translates to about $13.05 in 2024 dollars, creating a massive gap. And that's over the course of 54 years, which is built up from compounding inflation here. And because there's been no federal increase in minimum wage since 2009, It means that the $7.50 nominal wage has stagnated while inflation has chipped away at its real value. And you might think this doesn't apply to you if you make more than minimum wage, but this actually applies to you more than ever before if you're just saving your money in a bank account, hoping to just save for retirement, buy a house, and then retire into the sunset with your white picket fence. Because if you look at the purchasing power of the dollar over the years, ever since the dollar was taken off the gold standard in 1971, and quantitative easing was put on basically steroids with George Bush in order to stimulate the economy after the 2008 subprime mortgage crash, well, the US money supply has since grown by $3.8 trillion just in 2020 alone over the course of the few months after COVID, equal to 20% of all the dollars ever created. There was more money put into circulation in like 3 months than the first 200 years of the United States being formed after the COVID crisis. And so I thought this clip right here is a perfect way to explain it from Principles for Dealing with the Changing World Order by Ray Dalio.
As people get used to doing well, they increasingly bet on the good times continuing and borrow money to do that, which grows into financial bubbles. Naturally, the financial gains come unevenly, so the wealth gap grows. Wealth gaps are self-reinforcing because rich people use their greater resources to reinforce their powers. For example, they give greater privileges to their children, like better education, and they influence the political system to their advantage. This causes the gaps in values, politics, and opportunities to grow between the rich haves and the poor have-nots. Those who are less well off feel the system is unfair, so resentments grow. But as long as the living standards of most people are still rising, these gaps and resentments don't boil over into conflict. Having the world's reserve currency inevitably leads to borrowing excessively and contributes to the country building up large debts with foreign lenders. While this boosts spending power over the short term, it weakens the country's financial health and weakens the currency over the long term. In other words, when borrowing and spending are strong, the empire appears very strong, but its finances are in fact being weakened. The borrowing sustains the country's power beyond its fundamentals by financing both domestic overconsumption and international military conflicts required to maintain the empire. Inevitably, the cost of maintaining and defending the empire becomes greater than the revenue it brings in, so having an empire becomes unprofitable. If the empire begins to run out of new lenders, those holding their currency begin to look to sell and get out rather than to buy, save, lend, and get in. And the strength of the empire begins to decline. The decline.
And currently we are on the path of decline. Now this happens over years. It doesn't happen right away, but with how much money they've been borrowing versus how much money they've been collecting, it further pushes up asset prices. Now, again, the Treasury has been buying back debt. You can see here, September 18th through September 19th today. On the Treasury buyback operation, the results here shows the maximum par amount to be redeemed, total par amount offered, total par amount accepted in the billions of dollars. So basically you're buying your debt with more debt here, and this further pushes up the costs of things like stocks, real estate, precious metals, even crypto. And if you look at buying versus renting in America here, with home prices and mortgage rates both rising, the US has witnessed the biggest numerical gap in cost between owning a home and renting in over 50 years. So Americans, however, have seen similar scenarios since the 1980s. During the peak of home buying for the older baby boomers, the 30-year fixed mortgage rate hit a record high of 18.63% in October 1981. Then we saw this blue line right here, which is the cost to buy, come closer to the red line, the cost to rent. And it was really just a toss up on what you wanted to do. Obviously, buying a home during that time made more sense if you were going to own the home over the course of decades. But if you were just going to be in it for a year or two, it just made more sense to rent. Then the housing bubble by 2006 to 2008, the gap was so massive between the cost to rent versus the cost to own that the smartest move during that time was to just wait and then accumulate when this blue line right here dipped below the red line, the cost to rent. So then you could buy up the homes on a dip and rotate your capital into real estate. Then you would have ridden that wave back up to where we're at today. And if you look at this, the gap is the largest that it has ever been, where it just makes more sense for people to rent than it does to own these days. especially since after February of 2022, since the Fed jacked up interest rates. They're still up here where it made more sense to buy a home in 2022 or earlier. So a lot of people that are being sold on the dream of save in a high interest savings account, well, their dollar's getting eroded because the US national debt continues to climb. And the gap between owning a home versus renting a home is so massive right now that if you look at the median sale prices of houses sold in the United States, well, in Q4 of 2022, it was at the peak. And so we've been slowly going down from here. So based on this chart alone, it reminds me of what happened here going from 2007 to 2009, leading us into a recession. It's just not smart to buy a home right now until this bottoms out. And this has happened several times in the past where it leads us into a recession, and then you could buy homes at a better price after the Fed has cut rates. So with projections going into 2027 of rates going down, a lot of people are going to be looking to refinance their home, and a lot of millennials are going to be looking to buy a home, but I don't think that time is now. Because if we look at the M2 money supply, it's at an all-time high. Trillions of liquidity are flowing into the system, and we're seeing that reflect in the stock market. The S&P 500 is at an all-time high. Even looking at the price of gold here, gold's pretty much at its all-time highs. And if you look at silver, silver's just lagging behind gold. It's still below its all-time highs, but I think silver's going to break out into price discovery and go into it a massive euphoric run. And then that brings me to the crypto market, because Bitcoin right here is just teetering right below its all-time high. And I think we will see a blow off top for the crypto market. Now, if you look at this right here, FTX, the cryptocurrency exchange that collapsed during the bear market, well, they're set to distribute $1.6 billion to creditors on September 30th by the end of the month. So more liquidity is going to be coming into the market. And there's multiple catalysts that are lining up for an incredible Q4. The Russell 2000 just hit a new all-time high. And if you look at the Russell 2000 compared to the crypto total market cap excluding the top 10, well, the Russell first broke out right here in November of 2020, made a new all-time high, and proceeded to rally up till the 15th of March. And then others shortly after that, on the 28th of December, broke out to an all-time high with the Russell 2000. So right now, the Russell 2000 made barely just an all-time high, very similar to what happened back here by November of 2020. And if you look at others, the others chart right here, it's still below its all-time high. So if the Russell 2000 does a similar run to what happened right here between November 2020 to March of 2021, then I would expect that to flow into the altcoin market as investors rotate their fiat currencies, their US dollars, over into crypto. And what would that look like for the entire industry? Because if we look at the market cap of the whole industry, we're just shy of $4 trillion right now. We're sitting right on top of this key support right here that was resistance at the tail end of November and December of 2024. On the weekly chart right here, we've held it as support, and we're currently above the 200 and the 50 moving average here. Very similar to what was going on during this stage in the bull run before we experienced the blow off top. So a lot of people have debated about how far this bull run will go and how much longer we have. And that's a good question because nobody knows the answer, but we can look at different confluence points, different data point, and then I can help you come to your own conclusion here, because as always, it's not financial advice. I'm not telling you to buy or sell anything. These videos are purely for educational and informational purposes only, and if I share my opinion, then you should always consult your financial advisor, because they're just as clueless as the rest of us here. So if we look at the chart on the weekly, and if we look at the relative strength index going back to the last cycle, this is a momentum indicator, and you can see that the RSI topped out at 93 on the 4th of January of 2021. Now, a lot of people think that that's a good time to sell, when in reality, if we're in a strong uptrend, that's just the start of a massive bearish divergence. So for example, the whole industry was at $1.1 trillion, and we just continued to put in higher highs, whereas the relative strength index put in lower highs all the way until the true peak of the market on the 8th of November. We just saw lower highs get put in here. Now, if we're looking at what's happening now, we saw the RSI peak out here at 89, and the market cap of the industry was at $2.68 trillion. During the next top out period in December of 2024, well, the RSI made a lower high at 78 right here. So this is the start of a much more macro bearish divergence, which just means bullish momentum is slowing down. It doesn't mean it's done. It means it starts to slow down, and eventually we see a reversal take place, and that leads us into a bear market. So the real question is, how much higher do we go before we head into the bear market? Because just recently we've seen this pullback on this wick from 4.15 or $4.2 trillion, if I were to zoom in, and the relative strength index was only at about 69 to 65 right here, putting in another lower high. So arguably, if you just look at the chart right here, it's comparable to this little pullback in the market before we experience the final run to the end, if we're just basing this on the 4-year market cycle theory. And what's happening right now in the stochastic RSI with this little pullback right here to 62 and 56, bringing us closer to 50. If this acts as support, we could see a bounce to the upside in the stochastic and a reversal similar to what happened here by October of 2021 for a final rally in the market to bring us back up in here while the relative strength index was forming its final lower high before the bear market hits. Now, if that were to happen and we see the altcoin market and everything break out further closer to $4 or $5 trillion, while the RSI bounces up, it could still technically be a bearish divergence if we form a higher high than the 21st of July, because going back to the 2nd of December, the RSI was at 79 here. So if the price chart forms a higher high, I would just expect the RSI to form a lower high than either the high of December of 2024 or the high of March, because that goes all the way up to about 89 or 90. And then I would expect the next consolidation period to just be the beginning of the start of the bear market before we go into this complacency stage high after this next move in the market. So I think we're at the final run here. So at the beginning of this video, I said you don't have much time left. The real key thing that we need to watch here is we need to watch the 50 moving average here, because when we break the 50 moving average, that's the beginning of the end, and that's this red line right here. So we're well above it right now. And arguably we could break that sometime January, February, March of 2026. And we also want to watch the 50 moving average on the daily for when it crosses below the 200 again, because we saw that happen a few times here back in 2021. One time was right here after that initial sell-off. The next time was right here by the end of the market. And we've already had this happen a couple times. Once right here in August, another time right here in April. And honestly, based on this alone, I think 3 strikes and we're out here. The third time that the 50 crosses below the 200 after the markets have topped out will be when we're selling off. And then I think I would expect there to be a rally back into the 50 moving average in blue, similar to what happened back here by the 3rd of April of 2022 as like the final curtain call here for the bull run before we go into a bear market. So the real question is just how high will that put us on this rally up going into December of this year? Because if we look at total twos chart, which is everything other than Bitcoin compared to Bitcoin's price chart, we can see some similar price action here where we rallied up to about $1.7 trillion right here by the 13th of September. We sold back off. We held support right here at about 1.64 trillion. Then we rallied back up to this resistance, got rejected from it. Look at Bitcoin's price chart. We rallied up to about $31,000, get sold off to this support right here. We come back up to resistance, get rejected another time, we come back down to support again, and then we work our way on out of here before massive liquidity injection to break through resistance. This is all that I think is going to happen for altcoins here after this sell-off is done. You know, if we come back down further, this would be the zone of support that I'd want to watch for us to then work our way through here before we see liquidity injection come into the market, leading us into October, November, and December. Because look at the relative strength index as well. We're down here at 34. We've been in a downtrend. So once the RSI finally finds a low, if we go below 30 down here, it's very similar to what happened here by the middle of August. We were down at 19 on the relative strength index. Then we started a new uptrend. I just expect the exact same thing for us to bottom out on the relative strength index, then for us to just start a new uptrend for the RSI to go back above 70 at some point on the major breakout, like what happened for Bitcoin right here after the tail end of October of 2023. Same thing for the stochastic RSI. We're all the way down here at 23 and 10. We are in oversold conditions right now. So this is actually the time to be getting bullish and start looking for good opportunities to back up the truck, because this is exactly what happened to Bitcoin right here at around $25,000. The RSI was here at 19. The stochastic RSI at the bottom of the screen was down here at like 2 to 3, almost at 0 in drastically oversold conditions. What this means is confluence. And confluence means when multiple points are intersecting at the same time that traders are looking at. For example, you can see on the price action on the chart, Bitcoin was at support at roughly $25,000. The relative strength index was in oversold conditions and the stochastic RSI was in oversold conditions. So you can see confluence point number 1, price action coming in contact with support. Confluence point number 2, relative strength index, oversold conditions. Confluence point number 3, stochastic RSI, oversold conditions for the K line, the D line. And then you can stack that on top of other indicators as well, like the MACD too. You can look at the MACD and see what was happening here. Where was the MACD line, the signal line? It was all the way down here, well below the 0 line, forming a bullish cross. That's another confluence point number 4. And you could just keep stacking these up. The more points of confluence that you have showing that we're oversold on different indicators alongside the price action on the chart, it just gives you better entry point. And so right now on the left hand side of the screen, we're not quite to these levels of support that we were at down here at about $1.64 trillion. We might need to see, a few $1 billion knocked out of the market still and liquidate a lot of leverage traders while the relative strength index comes a little bit lower and the stochastic stays down here a little bit longer. And if you look at the MACD as well too, we're still in a downtrend right here while the histogram is rotating around from bullish momentum, or bearish momentum, sorry, back to bullish momentum. So we need to see a bullish cross down here below the zero line, similar to what happened over here on the right-hand side of the screen. So that could mean, the total altcoin market and the whole entire industry bleeding out a little bit more before we see a bounce in the market. And I think we're almost there before we see this revival take place. And when we see that bounce happen, we're going to see projects like XRP, we're going to see Solana, we're going to see Ethereum, we're going to see Sui, Chainlink, a lot of projects just break out all at the same time. So if we're looking at news of one of the most bullish companies out there, well, that's Ripple, where you can see right here, they just announced that one of only 4 licensed crypto custodians in South Korea is delivering secure institutional access to XRP, RLUSD, and other tokenized assets with Ripple custody. So BDAX is enabling institutional clients to execute on their digital asset strategies here. Just another use case for Ripple and XRP. So while everyone out there is saying that XRP is a scam, well, US Treasuries just got tokenized on the XRP ledger. There's a $27 trillion market there. This is how real adoption starts. And if you look right here in terms of the real world asset valuation, it's really small. It's only $356 million on RWA.XYZ here. And if you look at the XRP ledger metrics based on tokenized asset value here, you can see Open Eden, Vert, Montes, Ondos, short-term US government fund bonds. You can even see like Dubai Marina Mall Hotel has 517,000. So this is with Ripple talking about tokenizing real estate over in the Middle East. It's just getting started. And so this is just going to continue to grow on the XRP ledger here. And the total value here is just really, really small. The largest one is $135 million, which as you know is nothing compared to how much money you've seen flow in new projects that launch in a matter of a day, even meme coins that get upwards of $1 billion, $2 billion, $5 billion valuations. Tokenization of real world assets are the future. Now, Gary Gensler, one of the best days in crypto history was when he stepped down, and now he's been on the hot seat here on CNBC. Listen to what they just said here.
They are reversing a lot of what you did. And how are you feeling about what they're doing now?
So I'm very proud of what we accomplished.
And the crypto community is ecstatic not to have you there anymore and to have him there. Looking back on it, I mean, do you think that was the right call?
Yes. I think
because look, now we have this like burgeoning industry, and there's so much more innovation and leadership in the U.S.
and a lot more
crypto.
capital coming into it.
There may be more capital in terms of the interest in the public. The public is interested. I get that, but for investors,
you think this is dangerous? What they're doing?
Put aside Bitcoin. But most of the other tokens are not tied to any fundamentals. Like Warren Buffett would say, what are the goods? What are the revenues? What are they selling? And so forth.
So this is just the highest level of delusion where he thought his moves were the best moves, and clearly they weren't because they just stifled innovation. And now we can see the light at the end of the tunnel here with these ETFs getting ready to be approved. And so the SEC has from October 18th through the 25th to basically approve or deny the XRP ETFs from Grayscale, 21 Shares, Bitwise, Canary Capital, Wisdom Tree, Franklin Templeton, CoinShares. The only company that's really missing on this list is BlackRock, and they're keeping it on the hush-hush right now because of the non-disclosure agreements that are signed between Ripple and BlackRock. And now if we look at the XRP price chart here compared to the crypto total market cap excluding the top 10 and what happened last bull run here, roughly around December, January of 2021 when the Russell 2000 was breaking out, well, that's when XRP rallied from 20 cents all the way upwards of $2. Now, it's very interesting because when this complacency stage high here was broken, this is the high that I'm looking at, April of 2018. This is simply just a dead cat bounce on an ABC corrective wave during a bear market that usually acts as a resistance during the next bull run on this revival pattern right here. After we put in a low, we just form higher lows and we build up pressure and momentum back to that B wave as resistance before we finally break it. So that's all that we're doing right now. That B wave was right here in November of 2021. The reason why I say that is because that's when XRP was putting in a lower high. So XRP's A, B, C corrective wave, this B wave for XRP, very similar to how this B wave for XRP in April of 2018 was a lower high than the high of that bull run. So we saw the same thing back here, A, B, C to the bottom. For 2021, A, B, C to the bottom, whereas the others chart right here formed a higher low. So the B wave was a higher bounce, and that's normal on an ABC corrective wave, and then the C wave was the bear market low. And so we have not seen others break out past this B wave here. We've just seen it rally into the B wave get rejected from it and just continuously form higher lows here ever since November and December of 2022. So the altcoin market has just been building up pressure right here at this resistance. And when the Russell 2000 finally makes a major move alongside the crypto market, I think we're going to see others break out and experience a major run to a new high at the same time that we see XRP make a move too. So sure, in the short term, XRP could sell off a little bit further, just like I shared with you on this chart right here, mirroring what happened with Bitcoin from August of 2023 until October of 2023. We need to find this low and then start working our way through here after the RSI bottoms out, after we form a bullish cross on the MACD below the zero line, similar to what happened back here in August of 2023. Once that happens, then I believe XRP's low will be in, and we will start the breakout to a new all-time high while the Russell 2000 is breaking out, while the crypto total market cap is breaking out as we go into October, November, and December. So we still have 3 months left before the end of the year, almost 3.5 months. And as you guys know, when these rallies take place for the altcoin market, they happen over the course of a 1 to 3 month period. I mean, look at this rally right here at the bottom of the screen from July of 2021 right here to the high. It was 112 days. It was just barely over 3 months. Even look at this rally right here from the breakout of December of 2020 to May of 2021, 133 days. That was about 4 months. So over the course of 1 to 3 or 4 months from where we're at right now, 100 days is leading us into January of 2026. Wouldn't it be coincidental here if the whole entire market is breaking out and we see that great rotation into altcoins over the course of a 3 month period? Well, that's why we created our free Discord group for you guys, and we got almost 1,000 members in. We got 995. Click the link in the description below. Join this group. It's free to join it. You can connect, network, and chat with other members in our community. And occasionally when there's some good trades, there's some announcements, we'll post them in there. For example, this one I made a video about yesterday. Binance is going to be listing this project, Aster. It was at about 65 cents. And over the past day, it's up 34%. It's at 83 cents. So had you been in that group, you would have caught that first. So plug in through the link below. We also have an even more exclusive group called Altcoin Pro University, where our research team spends 24/7 in the trenches researching the crypto market for some of the best altcoins, the best DeFi yields, the best airdrops, and they share them with you right when they discover them before we ever make any videos about them. And a lot of times we just don't even make videos about them because there's so many, and we would rather keep those exclusive to our members because our research team gets paid tens of thousands of dollars so they can do this full time. That way you don't have to pay them, and it only costs you $97 a month to get access to the most explosive low caps, mid cap, and large cap altcoins in crypto. For example,
our research team posted GOAT on the 13th of October of 2024 when it was right at a penny, and since then it rallied to over $1, 5,000%. That's like turning $1,000 into over $50,000. Our team called Pendle at only a $16 million market cap, or 16 cents, back on February 18th of 2023, all the way back here, and since then it's rallied up over 4,000%. That's a 40x. It's like turning $1,000 into over $40,000. Our team also called BitTensor Tau September 15th, 2022, before the token was ever even launched. And since then, Tau has rallied over 2,000%. That's a 20x. Our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below. Get in right now. Watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.